Weekly analysis for 25th February to 1st March 2013. Brought to you by Ochuko Ochiado. The Euro USD has been on a drive to the south for some time now, and this was further strengthened with the formation of a doge about 2 weeks ago on the weekly time frame. This is what we call a doge. On this weekly time frame also, price is currently locking around a major support at 1.3132. If you bring your horizontal line very well, this is 1.3132. Now, the reason why this area is a very important place to take note of is because it is also an event area. Now, if you look at this chart very well, you see the formation of what we call a pin bar bouncing off. So this area became an area of support. Now, this area of support has now turned into an area of resistance. This area here. Now, you can see this area was also tested again. This area has been tested 3 times. And now you can see price has currently fallen off to that area here, this area here. So what we expect is that price will bounce off. Now, in order for us to determine what direction this price will go on this pair, the best thing to do is to go to our lower time frame, especially the daily time frame or the 4-hour time frame. You can see this area has been marked 1.3132. Now, on this 4-hour time frame and also the daily time frame, as the case may be, we can see the formation of what we call an ideal bullish Gartley pattern. Now, let me demonstrate this ideal bullish Gartley pattern so you understand what I'm trying to talk about. Now, if you look at this ideal bullish Gartley pattern very well, this area is called point X. This area is called point X. You can see how price fell, forming what we call a support. So, forming what we call a point X. Why this is what we call our point A here. So, connecting these two together, we call it this is what we call the XA leg. Now, this area is what we call point B. Now, connecting this point A to point B is what we call the AB leg. This is the AB leg. Now, this area is what we call the point C. Now, connecting them together is what we call the BC leg. Now, our point D is our potential reversal zone. And our potential reversal zone is within the range of 1.3154 to 1.3130. Now, let us mark our potential reversal zone, 1.3154. 1.3154 is exactly around here. That is exactly around here. Just this area. Then 1.3130 is around here. So if you take note, this our major area of support that we spotted on the weekly time frame is within our potential reversal zone. This our potential reversal, this area painted in yellow, is within our potential reversal zone. So this area, like I said earlier, is what we call our point D. This area here, this area painted in yellow. So if you take note, you can see how price formed multiple candlestick pattern around this area. I'm talking about this area here. This area here, you can see multiple candlestick pattern bouncing off from our potential reversal zone, our point D, bouncing off from this area that is also called a major support area that was spotted on the weekly time frame. So what this is giving us is that since we have spotted a major support area on the weekly time frame, now on the 4-hour time frame we are seeing multiple candlestick pattern bouncing off from our potential from our ideal Gartley pattern. So we expect that price will travel north. So this week, my bias on this pair, this Euro USD, is to buy around this area here. We expect that price will travel north to the top. If this our potential reversal zone is being compromised, I'm talking of this point D, then we expect that price will fall further down. But as it stands, we are looking to buy upon market resumption and travel and ride the trend up. Now, if you go to your daily time frame, you also see the formation of this ideal bullish Gartley pattern. Now, let me enlarge it so that you see what I'm talking about. So, this is point X. This area is called point X. This is point A. Now, connecting them together, this is what we call the XA leg. This is the daily time frame. Now, this area is what we call point B. Now, connecting them together, this is what we call the AB leg. XA leg, AB leg. Now, this area is what we call point C. You can see the formation of this bearish pin bar that gave rise to this fall in the market. So on this daily time frame, you can also see the formation of what we call a dogi. A dogi is usually formed at the end of a trend. Now, this couples with our major area of support that we spotted on the weekly time frame. Even on this daily time frame, you can see this area is also an event area. Talking about this area here, you can see how price is testing this area. Now, let us complete this area. So this point C, this becomes our BC leg. This is our point D, our potential reversal zone that I told you is within the range of 1.3154 to 1.3130. This is 1.3154 is around here. 1.3130 is around here. So you can see how this ideal bullish Gartley pattern, of course, this is our point D. This is our point D. So this is what we call the CD leg. Now you can see how this ideal pattern was spotted on the 4-hour time frame and on the daily time frame. Now you can see how this area, our price is gradually bouncing off from this potential reversal zone, which also coincides with a major support area on the weekly time frame. So you can see the confluence of events giving us the more reason why we should be looking to buy on market resumption for this week. So my bias for this week is to look for a bullish trade here. We could buy at the 50% of this dogi. We could wait for price to get to this 50% region and buy, or we could buy at the tip here. Then our stop loss, of course, will be around this potential reversal zone. So we'll look to ride this trend up. This is the pounds USD weekly time frame. Now, if you look at the pounds week, this pair, you discover there are multiple areas of support around here. Multiple areas of support. You can see this area has been tested almost 3 times. One here, here, here. Follow what we call a triple bottom. Of course, we expect that this area will be a major barrier for price to penetrate. As it stands, we can see a mighty market momentum, bearish market momentum that has compromised this our major area of support. So this area of support has been compromised with this long bearish momentum candle. Now, if you go to your daily time frame, you can see the formation of a pin bar, a bullish pin bar. The reason why I'll be taking a lot of caution on this trade is because, one, on the weekly time frame, that area has been compromised. And on the daily time frame, you can see that this bullish pin bar is being accompanied with a long bearish candle. So there is a lot of bearish momentum on the pounds USD market. So therefore, how will I take this trade now? Now let me enlarge it so that I will explain better. How will I take this trade? Now the best way to take this trade is to wait for market to penetrate this bullish candlestick pattern, this bullish pin bar. If this candle is being compromised around here, if this candlestick is being compromised around here, So we expect that price will fall down around here. If this area has been compromised, we wait for price to fall below this point. Price gets here, then resume a bearish move down. So that is how I'll be looking to trade this pair. So if we also spot a harmonic pattern on the 4-hour time frame, that will give us an excellent opportunity to short this market. So I'll be discussing more on how to enter a high probability setup on this pound USD in our membership area. There are lots of opportunities on this pair. Lots of opportunities on this pair. In our membership area, I'll be discussing that. If peradventure price fails to penetrate below this bullish candlestick pattern, then we'll be looking to buy at the head of this pin bar. But in the absence of that, we expect price to continue further in the bearish direction. And the reason why I said that is because of this bearish candlestick that ended on the bearish side of the market. On the USD card weekly time frame, there's the formation of what we call an emerging bullish Gartley pattern. Now let me demonstrate that to you here. So this is point X. X formed after this long trend, bullish trend. Now this is point A. Now connecting them together, this is the XA leg. Now this point is what we call point B. Now connecting them together, this is what we call the AB leg. So this area is called point C. Now connecting together, this is what we call the BC leg. So our potential reversal zone for this pair is within the range of 1.0275. 1.0275 is around here to 1.0317. 1.0317 is also around here. Sorry, 1.0317 is around here. Just around here. So this area is what we call our potential reversal. This area colored in yellow. So as it stands now, price is gradually approaching our potential reversal zone. I posted this bearish emerging Gartley pattern 2 weeks ago and even last week, and I also alerted traders. And stated the reason why I will remain on the bullish side of the market on this pair. Of course, my reason is that the CD leg of the emerging Gartley pattern, there is the CD leg. This is point D. This is point D. This is our potential reversal. Of course, my reason is that the CD leg of the emerging Gartley pattern, I'm talking about this CD leg of the emerging Gartley pattern, is yet to be fully completed, and so I will look to ride on the back of the bull until price gets to our potential reversal zone. I stated that in my last video last week. As you can see, price is responding nicely to this CD leg completion. This week I'll be looking out for any reversal signal and hope to join the party with the bears, especially if I also spot any sign of dying momentum around this potential reversal zone or close to our potential reversal zone. The pounds JPY 4-hour time frame. The pounds JPY has been in an uptrend for a while now, and only of recent price has gradually retraced down. You can see it has been in an uptrend. Only of recent price has gradually retraced down. So on the 4-hour and daily time frame, an ideal Gartley pattern has formed, giving us clues that the bulls are not yet through with their movement up. Now let me demonstrate the Gartley pattern so that you understand what I'm trying to talk about. So this is point X here. This is point X. This is point A. Now, if you connect them together, this is what you call the XA leg. So this area is what you call point B. This is point B. Now, if you connect them together, this is what you call the AB leg. So this is point C. Now, if you connect them together, this is what we call the BC leg. Now, this area is what we call point D, our potential reversal zone. Our potential reversal zone is within the region of 141.08 to 141.14. So this 141.08 is around here. 141.08 is around here. Why 141.08? So this 141.08 is around here. Why 141.14 is around here? So this area is what we call point D. This is point D. This is our potential reversal zone here. So this area is what we call the CD leg. So as it stands now, you can see how price came from what we call an inside bar, a bullish inside bar. You can see how price reacted from what also what we call a doggy or a pin bar, bullish pin bar. You can see multiple price actions set up around here. You can see how it responded to this point D, moved up, then gradually coming down. So this week that I'll be entering, I'll be placing my focus on this pair and look out for any sign of market reversal around here. As it stands, price is also resuming its downward trend here. So I'll be looking for any sign of market reversal. Of course, we'll be looking for candlestick pattern around here. And once that is being spotted, we'll zoom north, because we expect that the trend is about to resume towards the upward direction. In the absence of that, if this our potential reversal zone is being compromised, let's say price falls down, then we expect that it will fall up to this level around here before we look for a bullish, before we'll be looking for bullish price action setup to go north. But as it stands, our focus is on this our potential reversal zone at point D, and once price gets to this area, or we see any price action setup, we'll be looking to buy on market resumption. Looking at the Euro JPY pair weekly time frame, it is clear that the trend is up and market has just reversed temporarily down. Last week, price reversed to about 122.13. That is this area here. This is where price reversed to 122.13. $122.13 is around here, just around here, 122.13. So if you look at that area very well, you discover that it is sitting around a previous resistance area. So this is what I'm talking about, this area here. You can see how price came, how price is gradually bouncing off from that area. Now let us go to our 4-hour time frame and see what it has for us. Now on this 4-hour time frame, remember this is our resistance area. Remember this is our resistance area that has turned into an area of support on the weekly time frame, 122.13 around here. So this is the area that we are looking at, this area here on the weekly time frame. Now on the 4-hour time frame, there is the formation of what we call a bullish crab pattern with potential reversal zone around 122.23 to 122.34. Now let me demonstrate that. Now first of all, we'll enlarge our chart. Now this is a crab pattern. Now this area is what we call, this is point X, this is point A. Now connecting together, we have the XA leg. Now this is what we call point B, this area. Now connecting together, we have the AB leg. Now this is what we call point C. This area is point C. Now connecting together, we have the BC leg. Now I told you our point D is around 122.23. That is, our point D is around here. 122.23 to 122.34. 122.23 is around here. 122.23 is around here. 122.34 is around here. Sorry. 1.2223 is around here. While 122.34 is around here. Now, this area is what we call our point D. This is our point D. Now, if you color it together, you get this yellow region is called our potential reversal zone. So you can see how price came. Of course, this is our CD leg. You can see how price came, bounced off. You can see the formation of multiple candlestick dying momentum around this point D. So our bias for this trade is to look out for a valid price action setup that will give us more reason to buy. Of course, you know that the Euro JPY has been trending high for a long period of time now, since June 2012. So I expect that what this setup is trying to portray is that the trend is about to resume its upward direction. So what I will be doing is that I'll be looking for a price action pattern. Of course, we are already seeing a price action pattern here. So as soon as market resumes, I'll be looking for how to scale in for a long position. However, if our potential reversal zone is being compromised, we'll look to join the market in the south direction. But for now, our bias is to go long. Thank you for your time, and I wish you the best in your trading.